Hi, this is David with eminitradingstrategies.com. In this video, we're going to discuss day trading for income using my Dow Emini strategy. We have a short-term Dow chart over here and a long-term over here. You can see over here on my long-term, I am using Pro Indicator version 2, which shows you the entries, and it also shows you, the actual entry valid signals, and you can also have it set to show you where you want to enter at. Okay. We had a long signal here, we lost on that trade, and we had to reverse. We made a full recovery down here, ended up being a very nice recovery trade. Now when I trade the short-term chart, okay, which is over here, if I'm trading against the long-term, so in other words the long-term is short, if I take the short-term trade opposite of the long-term trade, I go for a smaller target. You can see I'm risking 15 ticks. You've got to really give the Dow trades room to breathe, so the risk reward kind of looks skewed, but I always scale where I'm going to take 2 contracts off at 5 ticks, just a very small profit, and then try to grab 10 ticks off the remainder. And that's because I'm going, in a sense, against the grain, right? And this little bar here tells me that I want my entry to be below this. Now, if I'm trading the short term and I'm going to take a trade against the long term, I try to go and limit at a better fill than this outer line, okay, the outer marker, if you will. If I'm going with the long term, I'll take it right out there because I don't want to miss the trade. So currently right now we're looking right around 464, right in that area I would take a trade. We could get the signal here anytime, so I just kind of get the dome ready, lined up. And if we get the trade, we'll go and limit at 464 or better. Again, it's just a small scalp. Okay. If you don't like the risk reward of this trade, again, it's a little skewed. You certainly don't have to take the short-term trades when it's going against the long term. Okay. It's also worth noting that if you're taking a short-term trade that is in a direction, then you would go for a higher target. Okay, it wouldn't be as skewed, you would be going for more. Risk reward's a whole lot better. So when you're going against the grain, if you will, it's really more of a scalp. Just try to grab a little bit of money. And if you're going with it, then you're going to try to grab some more money. And of course, if the long term were to change direction, you would want to jump on that. Okay, like for example, if I were to go long on this trade with a small target, it more than likely I'd end up getting filled for my profit of 5 ticks. But if for some reason this went long and I was still in on a partial, I would then convert this trade over to a long-term trade, and if I was filled on 2 of my contracts, I would actually add 2 more contracts back into it. I would adjust all my stops and targets based on my long-term. Okay, so short-term trade against the grain, small profits. Short-term trade with the long term in the same direction, you go for more profit. And all this is explained very well in my Dow Advanced Training videos. But I'm hoping just to catch a quick trade and show you. We get a lot of questions and a lot of requests for more videos, so I am trying to get some more videos out there. So there we go. It's going to go. See, again, now I'm going in limit at 464. It's about 2 ticks below. I just got filled. If this long term were already long and maybe this one's short and long, then I would take it up higher. Okay, but I try to get a little bit of a better fill when I'm going against the grain, because to help absorb some of that risk reward, and again, just going for a small profit. Now you see these profit targets. This is Pro Indicator version 2. You can turn this on or turn this off, and you can set these profit targets wherever you want. You'll see they don't match precisely where I'm looking to trade, because it doesn't know where I was filled at. Okay, so I can set these at whatever levels I want. Okay, and it will actually measure them from a certain point of our entry. Okay, so just want to note that. Now the goal of the Dow, anyone who trades a Dow knows it's a lot less volume than the S&P. Okay, it also trends a lot better than the S&P. Okay, I've been day trading the S&P E-minis for a long time. It's still my favorite market, but the Dow's a close second. I love trading it. But the goal on the Dow is really to get the stop loss moved up as soon as possible. If we were trading on the long term, okay, we would move our stop loss as soon as we had 10 ticks profit. We would get it right up there quickly. In this regard here, once I see 5 ticks of profit, I'm going to start bringing up my entry somewhere around the 458, 459 level. Once it hits 5 ticks, and hopefully we'll jump off with a profit, bring the stop loss up. So if it did bounce down and give us a stop, we would pretty much made it back on that, on the profit we had up there. But that's how I mitigate the risk reward on my Dow, is by moving that stop loss up as fast as possible. But I've got to have, again, you've got to give the Dow trades room to breathe. So I have to start off at 15 to give it breathing room, but as soon as I go into profit, I get that stop moved up on the long term. And I do have some long term videos already. Here we go right here. Let's move that right up. When I say right around 450, let's go up a little higher, about 458. Okay, so we just got off on a small profit. Okay, moves up a little bit more. I'm going to take it up to entry, but again, I want to give this trade a little room to breathe. If I take it up too high, the Dow really shakes around, it'll end up, stopping me out. So right now, if it came back down, I'd have a small profit because we already let 2 contracts off. And if this were to go long, I would, and if I wasn't filled off this last contract, I would actually add more contracts to it. So I'm going to take this up to 460 now. We've right up there about 7 ticks. There's 8 ticks. There's 9 ticks. So I'm going to go ahead and take it right up here to entry. So up, and look at that, we're filled. So there's a quick scalp, okay? The risk reward, again, when you're going on the short term against the long term, the risk reward's a little skewed, but they're normally quick trades and they're scalps. Now what I could do is either wait for a long term to go long and go for a bigger target, right? Or I could wait for another short term and I could then take a larger target as well. So thanks for watching. That's just a basic introduction of how I day trade for a daily income with my Dow Emini system using a short term and a long term chart. Thank you.